Biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap here on Friday, August 12th, 2022. I had to look at my screen there to double check I had the right date. It is middle of August. I am, of course, welcomed by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, it's good to be here. It's shocking that it's the middle of August already. Like, where's time gone?
That was quite shocking when I just saw that. Only a few more weeks of summer left. So hopefully everyone's out there enjoying it. We're going to break down what happened in the market. I feel like there was a very small period of time, or it wasn't that long, that we kept talking about things not going so well. Our conversations are a little bit more positive as the summer tags on. So everyone should stay tuned. We're going to talk about the July CPI index results that came out. We're going to talk about consumer sentiment data. We're going to talk about market indicator improvements. And of course, we're going to get into some CSE issuer news. So let's talk about the CPI. The CPI stands for Consumer Price Index. It's measured monthly, and it's prices paid by US consumers. It's one of the most popular measures of inflation or deflation, right?
That's exactly right. Yeah. And it was highly anticipated, right? You know, the focus of the market since probably last October, November has been inflation. And so, you know, every month when this gets released, investors all over the world are watching this data to see exactly what it does. And there's expectations that are built into what it's going to be. And, you know, the market will trade around that. So we've got a graph up here of long-term inflation. You can see as high as inflation is now, it's not nearly as high as it was in the 70s and 80s. That being said, it still, you know, is one of the larger sort of mountains on the chart. And if you kind of look, you have to sort of squint to see it. But if you look on the right-hand side there, you actually see that inflation came down over the last month. And that was what the market was so excited about, is that, you know, there was anticipation that it wouldn't, it did. And, you know, with anything that the market looks at, it's always the kind of direction of change that's happening. It's not necessarily the rate of change. And there's lots of people sort of throwing different analogies at this and saying that inflation is still going to take, you know, a year before it's to the 2% target that the Fed wants. But the reality is it's going in the right direction. And the second point that we'll talk about probably is a function of the fact that it's going in the right direction, that, you know, people are feeling a little bit better in the market, moved up. And like I said, you know, the big driver this month in the CPI being lower was really energy prices, which we've all felt at the pump now, which is great. And then used car prices. The big issue is what they call owner equivalent rent. And so that's their rent calculation. And that's about 30% of the CPI. And that still is going to be trending up for probably till around the November timeframe is what most economists are predicting. And then at that point in time, we might start to see it come down. So the big news was the CPI was lower, and the market had a great day, and actually followed through for the week with great performance because of that data.
Okay, I have a question for you. So I believe, and we've talked about this before, I believe that U.S. inflation was estimated around, it had reached 9 point something. I think it was 9.2 or 9.3, and Canadian was 7.8. So their goal is to get down to 2%. Is that achievable in such a short period of time, do you think?
Well, that's the issue. It's not going to be a short period of time, and you know, they're increasing interest rates, and those rate increases will take a while to work their way through. And so, you know, you think that they just started that this year, and in February was when, you know, the housing market was at its hottest. The rent increases are still being passed through because, you know, most landlords are taking a look at their building and saying, you know, our building's worth so much more, we need to be charging more for rent. And, you know, it sometimes takes a while. If you have a lease, it doesn't just get immediately passed on. It has to go through that lease process before you renegotiate, and that goes higher. So that's the thought on why it will continue to trend higher here for the next little while. At least that portion of it will. There's lots of other areas that are certainly trending down. Food didn't really Food at home didn't really go down much for the month of July. That being said, if you look at a lot of the inputs, if it's wheat, if it's corn, if it's butter, milk prices in the U.S., a lot of those have started to trend down, but they again take several months to work their way through the system to where they're actually lower. So it didn't drop much over the month, and it's not going to get to that 2%, most likely by the end of this year. Something dramatic would have to happen, but it's trending down to there. So, it spiked higher, and, if it hit that 9, just over 9 in June, then, maybe by June of 2023, we're getting closer to that 2% target.
And I mean, what's happening for us as a consumer along the way is we're robbing Peter to pay Paul a little bit, because as we move forward, if we have to buy a house or if we have to buy a car, we're going to be spending more money on buying something to pay less money in the grocery store, essentially, right?
Effectively, that's the case. Yeah.
So it takes a while. I mean, the effects of this will take a little bit of time, but anyway, that's good news. This is good news. So on that note, let's talk about consumer sentiment data. What is going on there?
Yeah, so we talked about it before on the show, the fact that consumer sentiment data was at the kind of the lowest it's been since they've kept record of it. And historically, when that's been the case, when it gets to the record that it just got to, but when it's been low and kind of in a lower range, the markets tend to rally and do well off of that, because what ends up happening is the maximum amount of pessimism has been built in. The inflation numbers kept rising. We've all felt it. When you go to get gas, you go to the grocery store, you feel that inflation immediately. And now, we're starting to see some of those data points come back. And so the consumer is starting to feel a little bit better. Again, you have to squint a little bit on the chart, but at the right there, you can see that the sentiment data has jumped up, and it was the best that it's been in 3 months, which isn't a long time, but it is an improvement. And you think about, in Canada here, gasoline prices have come off, sort of 50, 60 cents a liter. In the US, they've dropped about $1 a gallon. And, that's great news for the consumer. And that's where, people see it and feel it immediately. And we hope that will transpire, along with what we talked, food costs in the grocery store. And then, at that point in time, you start to see, more area where the consumer feels a bit better and has probably a little bit extra money in their pockets, and that consumer sentiment data can continue to increase. And it means that they'll spend money. The consumer will spend money in other places.
Amazing. That's wonderful. Okay, so we're now going to move into another good topic, market indicator improvements. What are we seeing there?
Yeah. So, as you said, it's almost like, since we started doing this show, the indicators that we follow have been deteriorating. It only happened a few months after we started the show, and they've been heading down. And we sort of talk about them from sort of week to week, month to month, and we really haven't seen anything improving. The market was clearly very dark for the first half of this year. And then in June, the market bottomed, and now we're starting to see, kind of one by one, a lot of the technical indicators that we look at starting to improve. And so if you look at this chart here that's up on the screen, there's 2 different panes to this. So the top pane is the S&P level with just a couple of moving averages. And you can see that the market itself has moved through those sort of classic moving averages. So that's important. And then on the bottom is a momentum indicator. And you can see that momentum indicator has actually been negative since, call it, June of last year. So there's been momentum leaving the market. So even while the price stayed fairly high through, so that June to January period, the momentum was starting to wane. Now you're starting to see that momentum pick up. And what we know from history is that historically, these trends tend to last between, say, 12 and 24 months of fairly strong markets. We're heading into a cyclicality perspective from the presidential cycle that's going to be strong. Usually in the second year of the presidential cycles, which is where we are, the market's weak for the first for the first half of the year, and then gets stronger the last half of the year, where the last quarter is very strong. And then the third year of the presidential cycle, which is actually 2023, is the strongest of the presidential cycle. So we're starting to see these indicators improve. It's not just the S&P. We see it on a number of other indices. If it's, all country world index, which is looking at all countries, if we're looking at the total stock market capitalization of the world, if we're looking at the TSX, we look at it from individual stock perspectives, and we're seeing trends that are changing. And we're seeing a lot of trends that are changing even on a long-term basis. This chart here that we have up is a weekly chart. We also look at monthly charts, and we're seeing the same data on the monthly charts. So this is really positive. The market's rebounded a long ways. There's lots of discussion on to whether or not this is a bear market rally or if it's a start of a new bull. And we're really starting to lean now in the camp that this is a new bull market, and the markets tend to climb that wall of worry. The last time we would have saw this would have been, kind of that June 2020. And at the same time, people were still concerned about what was the next wave of COVID going to do? Was COVID done? Was it going to kill us all still? What was happening to the economy? And we saw these indicators flip positive. They stayed positive for, about a year and 15, 18 months. And then they turned negative. They've been negative, and now they're turning positive again. So we're starting to lean on the side that this is a new bull and a new uptrend that's starting versus just a bear market bounce.
That's pretty amazing news. Okay, I was actually just going to ask you about that because the prediction is that in the fall we're going to see a proper new round of COVID, kids going back to school, and the weather. It's just generally the time of year where these types of things spread. Do you think, just as we're getting some momentum, that there's a little fear that if we kind of end up back in lockdown for any reason, that it could slow that down?
Certainly that's a concern. One of the things that long-term market observers say is that the market historically hasn't sold off for the same reason twice. That being said, this is, COVID is a little bit of a different situation than we've been in before, because it affects the economy so differently.
Right.
And, if you look at the initial COVID wave that happened in February and March of 2020, things were very negative, but we were also not certain of what was going to happen. We shut everything down, and things really deteriorated over the market perspective. Excuse me. But then what we saw is the market made this big rally. And then if you go back last fall, when Omicron revved its head into our world, we really started to see at that point in time that the market did sell off again. And that was what sort of started and got going what we're seeing happen now.
Well, I hope you don't have COVID if you're telling me this story.
No kidding, hey?
I shouldn't laugh. I hope you're okay. But yeah, I see what you're saying. So what you're kind of saying is at some point we adjust to, so if we go back into another lockdown, investors will just adjust to it going, well, the last time or the last two times this happened, here's what we saw the market do. So they almost start to hedge what the market did last time, and they invest differently and prepare for it differently, right?
Well, it allows you to have a probability of what's happening and what kind of the time frame of that is. So everyone takes a look at original COVID and says, okay, well, how long has it been? What effect did it have? When did we go back? And then Omicron hit, and they were able to look at that. Before that, we didn't really have a data point. We didn't know what to expect. We didn't know how long it would take. We didn't know whether or not we would stay like this for years or months or days, or what it would do to the economy. Now we have experience, which helps us to really set a probability with our portfolios.
Yeah, absolutely. Okay, we're going to jump into some CSE issuer news. We are going to welcome a new issuer. Blockchain Venture Capital Inc. received its final approval for listing and the start of trading on the CSE. So this is interesting, and I wanted to ask you about this. This is a new blockchain company that's come to us. I'll just tell you a little bit about them. They're a provider of an innovative technology infrastructure to participants in the emerging blockchain and distributed ledger technology industry. From my understanding, they have a stable coin that is pegged to the Canadian dollar. So, if it's trading typically at the cost of the Canadian dollar, from my understanding. So welcome to Blockchain Venture Capital. We're excited to have you here. I'm excited about this because I haven't really heard a lot of blockchain stuff coming to market. What are you seeing in the blockchain space?
Well, we don't see a lot of specific individual companies that are just blockchain, but what we see is a lot of companies that are using the blockchain more so in their business. And that is a trend that we think probably continues going forward. And if you go back a few years ago, we actually managed an ETF here at StoneCastle, which was a blockchain adopters ETF. So it was companies that you probably wouldn't have expected. So, a lot of the big Fortune 500 companies, but who are using blockchain somehow in their business. If we were to do that today, the list of the universe would be probably 3 or 4 times what we had back when we did it a few years ago, because it just continues to get adopted. And this is a trend that, I think probably continues, and it'll revolutionize the way we do business in a lot of areas.
Well, and it's kind of, look, especially with cannabis, we saw this, but it's been interesting to watch these new markets come to the capital market. So it wasn't that long ago a company could say that they have a group of wonderful management team, and they're going to be developing blockchain, and that was enough for the company to be doing what they're doing. Now we're starting, like you said, to really see companies, issuers actually implement this into real-time use or real life use. So it'll be interesting to see it come through. It's not quite the same as it was, but this company looks like they have a lot going on. And it's quite interesting to hear that they'll be pegged against the Canadian dollar. That's a new one for me to hear. So welcome to the family, Blockchain Ventures Capital. Bruce, what should we think about going into next week?
Well, the 2 things that we're going to be watching, one is that there still is a fair number of Canadian companies that are reporting. Most of the US S&P 500 is done reporting, but the Canadian companies it's still fairly heavy. So we'll be watching those. And that has been very, very impactful in the last couple of weeks on stock prices, whether or not companies beat or miss. And then the second thing that we'll watch is we just want to continue to see this follow through that we've been watching for. So we don't expect the market to go straight up, and we expect the market to pull back, but how it pulls back and what it looks like when it pulls back, and then whether or not it can maintain certain levels. And that's what we're going to be watching to move us again closer to it's a new uptrend versus where it's a bounce in a bear market.
Absolutely. Well, we've been talking about that for 3 weeks, so I feel like we're getting closer. Hopefully that's the direction it's going to be heading in. Listen, Bruce, it's always lovely to chat with you. Thank you again for everything, and have a wonderful weekend.
Yeah, same to you.
Thank you.